Trading volumes in the junior resource market are up. So are financings. Hi, George Sanders, President, Goldcliff Resource Corporation. Glad you could join us. It is Friday afternoon, July 11th, and today the TSX Venture Exchange Index closed at a more than 3-year high, closing at 783 and change. More importantly, it did so on volume of 239 and change million shares. The second consecutive day this week of volume in excess of 200 million shares. And in fact, for the full week, the week immediately following the July holiday week, 3 of the 5 trading days had volume over 200 million shares, and the 2 that did not reach that threshold had volumes of 175 and 184 respectively. Those numbers themselves higher than what we've seen over the last 12 to 18 months. So it looks like we have an emerging scenario where volumes are increasing, some money starting to flow back into the sector. So let's take a quick review, see where we've been and what that will tell us about where we might be going. Before we put up a chart, we just want to make sure that everybody understands we're presenting these videos as a result of the conversations about observations of a number of market participants. This is not investment advice. I'm not a registered investment advisor, and we're not making any predictions about activities going forward. Having said that, let's put up a 2-year chart of the TSX Venture Exchange Index. Okay. As we've mentioned before, the TSX Venture Exchange Index is a very imperfect proxy for the junior resource business, but it is the best one we have. First thing I'd like to note on this chart is where we are on the far right-hand side at today's close. It's a 2-year chart, so clearly we're at a 2-year high, but if I take this back more than 3 years, you would see that it is a high for that length of time. In mid-February of this year, we put out our first commentary on the TSX Venture chart, and we noted at that time in mid-2024, we had this peak just around 730. We corrected down from that, and we reached that level again in October of 2024, had a correction from there, and then punched up again to that level in early December of last year. So when we put out our first video in mid-February of this year, we had just started to break through those 3 or 4 peaks or thresholds that acted as a ceiling or as resistance. We had just broken above that, and we were making the suggestion, asking the question, are we on our way to better market times for this sector? You can see that just after that, the market obviously corrected a little bit, and in mid-March, about a month later, we put out another video asking tongue-in-cheek, did we jinx the market? The market then recovered back to that level that it had reached on the breakout, and then you can see in early April we have this dramatic downturn which coincided with all sorts of geopolitical and international politics and economics. This was the tariff announcements. You can also see that that's what we call a V bottom. It was very dramatic, but very short-lived. I think I counted 7 or 8 trading days only, so less than 2 full weeks, and we had regained the ground that we lost, and you can see from there the last couple of months where the market has gone. A little over a month ago, we put out another commentary video noticing that the exchange was at multi-year highs, but also questioning where the volume was, because while the price activity as charted was showing something really positive, there wasn't really any activity. There was very low thresholds of volume. Yes, it was up marginally from the levels at its worst, but it still wasn't what we call robust. So if you look here down in the bottom right, you'll see the June and early part of July volume, and definitely it is an improvement. One thing to note, in the last sort of week and a half of trading, we have a couple of upside gaps in this chart. We also see a steepening of the ascent or rate of change of the measurement or the price movement that in the past has suggested that maybe a correction could be in order. It would be a very healthy thing. Again, no predictions here, but it would be a very healthy thing if those gaps were closed on a short-term pullback and a little bit of a correction to allow the momentum to continue. Okay, let's take the chart down and just have a couple of takeaways. Definitely volume is improving, which is a great thing, and it's improving on the with upside momentum, so that's really encouraging. Something I particularly find encouraging is days like today, where we had a dramatic outperformance by silver as it relates to gold. Although both were up sharply, silver as a percent really outperformed gold. I think the silver to gold ratio has now dropped back below 90, so that's a positive thing. As a result of that, substantial number of the leading traders today were silver exploration companies. We at Goldcliff are very gratified to see that, obviously, because one of our main assets is the Ainsworth high-grade silver project. For those who might have missed that in past videos, we are the largest land holder in this historic district in southern British Columbia, where really spectacular high grades of silver have been mined in the past. Our geologic team is really honing in now on some of the controls for that high-grade mineralization and designing exploration programs for later this year to follow up those controls to see if we can find more of that high grade. So we're particularly interested in the price of silver. We're particularly interested in seeing the response in the junior market of silver exploration companies and the leadership they take in the upward momentum. So, are good things in the future? I will report from several conversations this week that a number of market participants, colleagues, are observing the same things, and they're also noting that this is very early days. We haven't typically in a new bull market, you get to a point after a number of weeks where things start to explode, and we're certainly not at that stage yet. Simply to get back to a 200 million share threshold is in no way explosive when you compare previous bull markets with volumes of 350 to 450 million. So we don't think we're close. We think this is early days. Who knows? It's never a straight path. We would draw your attention back to that February video where we observed that direction is often determined by one's time frame. And if one's time frame is the next couple of days, the observer might be very wrong, and we did say, let's give this more than a few weeks, let's give it a few months. So here we are a few months later. Things are definitely looking better. We will have updated information and some things to say about Ainsworth in the not too distant future, so stay tuned for that. And as market conditions either improve or deteriorate, change in any event, we will update you with a video about that as well.